Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, May 16th, 2007, and the market's closed. The people who've been selling short and trying to pick the top of this market have once again stepped in front of a moving freight train that just doesn't want to slow down for very long. The Nasdaq 100 closed with a gain of 45 cents, or just about 1% here. As you can see, that 20-day moving average has proven itself as a level of support here the last couple of days. So we've seen the initial pullbacks to the rising 10-day moving average, and then now we've seen the 20-day moving average after these tests of the 10 right there was what I was talking about. So we've got a very good uptrend still, and it looks as though we're still within this range of that trend. Though it's 45.75 up to about $47 a share, but there's no sign here of a top. You got to look at price action. Yesterday we did note that these 2 days of heavy volume did have selling, but until the market really breaks down, the volume really is just a warning sign, nothing more. It's not anything to act upon. Price is what you act upon, and price still does hold up. We had a test of the $46 level today, and even with a declining 5-day moving average, the buyers came back in and pushed it higher once again. We still do, though, see on this shorter term, this is a 30-minute time frame, we do still see this series of lower highs and lower lows. So it's not all green light yet. It's, again, in a trading range here of about $45.75 up to $47 a share. I find it a market with little conviction either way here with these whippy moves. So I've been trying to just take it easy in here, which is what I've been talking about the last couple days, saying that we've got a very nice uptrend on the daily time frame, but the short-term time frame, it looked like the sellers regained control yesterday. However, the buyers are back in control again, so I think that options expiration has something to do with that, but it's a choppy environment in here, so I think you're better off just making quick intraday trades, which is what I emphasized this morning. So let's take a look at the S&P 500, because that did finish with a new closing high. You can see that that market was up $1 or 0.66%. So this is the highest close we've seen this year and in multiple years, obviously. And yesterday again we had heavy volume that convinced a lot of people that the market was going down. But again, the price action did hold up. So right now the S&P 500 is right up against these highs. Like I said, it was a closing high, but we do have a little bit of resistance that's formed here at about 151.65. But it looks to me like this market still is very healthy uptrend. Higher lows in here leading to multiple tests of resistance. I think it breaks out to the upside here. And then looking at the semiconductors actually had a good day in my mind. They were down 11 cents or 0.29%, but they were influenced on the open by a bad reaction to earnings in Applied Materials. You can see that that stock was down almost $1, but the semiconductors were only down 11 cents. You see that they did gap lower and then continue down a little bit. The buyers regained control intraday, and this little level of resistance acted as support. And now we've got, on the 10-minute time frame, we've still got a short-term downtrend, but it looks as though this 37 level seems to be an area of pretty decent support, and that's also where we have that rising 20-day moving average. As I've said, this market is still in a very good uptrend. We had a significant breakout. There's a lot of people trying to pick tops in the semis, and the evidence just is not there. We've got what looks like a pullback with support at $37 a share. Now let's see if the market can firm up a little bit, see that 5-day moving average flatten out again like it did over here, and then look for the market to resume that uptrend once again. So semiconductors, if you're looking for the top, I don't think you're right on the trade. The trend's your friend, and the trend continues to clearly be higher. The IWM Russell 2000, yesterday we were looking at this and saying that the important level continues to be that $81 level, and the market closed with a gain of 48 cents or 0.59%. So even though we had a test of that level once again and on increased volume, the sellers did not take control. I stated that because the 10-day moving average crossed below the 20-day moving average, it suggested that we go slow in here and perhaps a range-bound trade, but a range within an overall uptrend based on that rising 50-day moving average. So the trend is still higher in the Russell 2000. The moving average cross just says maybe we're due for a little bit more consolidation through time here as buyers regain control, and if it can push past that $83 level, then I think we'll see continued upside in the IWM.